Let's talk all sorts of things. Crypto regulation, social media, AI, China, and more. Joining us now is Jay Clayton, former SEC chairman. Should we start? We were talking off camera about I am accused of negligence at home a lot, and I don't try it. I'm just not always smart enough to know what I should be doing, right? Is that... I mean, there's a rule now being proposed for the SEC. Doesn't have to be gross negligence. It's almost anything could be construed as negligence in terms of lawsuits.
Yeah, look, I think a mandatory negligence standard in the context of investing, which is inherently uncertain. It's about the future. We can't predict the future.
And if you go for high returns, there's going to be losses from time to time that might not be from negligence.
And a legal standard like strict liability, negligence, gross negligence, recklessness, those standards are judged with hindsight. And so you have a negligence standard with something that's forward-looking. It doesn't make a lot of sense. It also, from what I would say is not just from a substantive point of view, but from a legal point of view, imposing contract terms on private parties, that's a pretty big step. You know, parties who can freely negotiate. What I think is a better way to approach the investor and the manager is ensuring alignment of interest. What are we doing to ensure that there's alignment of interest, that people have the same sort of skin in the game? That's a much better way to deal with these issues. Yeah,
don't hold your breath. That's not going to happen anytime soon. And either party, depending on who's in office, could certainly accuse the other party when they're in office of gross negligence. You don't think Republicans are talking about what's happening now as gross negligence in the economy?
I think that's exactly the point, Joe, which is that in how you manage an investment, how you manage the economy, when there are so many factors at play, with hindsight, you're always going to be viewed as not having done the best job you could.
Have you watched with interest as blue chip firms have decided that they want to get involved with Bitcoin or crypto?
Well, give me a minute. It's a fascinating etymology. Let's go back to like 2015, 16. This is an offshore, retail, nothing close to what I would say the core of our financial markets. At that time, if you look at trading of Bitcoin, the emergence of Bitcoin, it looked like stocks, but it was nothing like it. Now we've seen a development all the way to the point where companies whose reputation in the market matters are saying, you know what, we think that trading, we think that the custody, we think that those protections around this market are sufficient that we're willing to put our name on it and offer that product. That's actually an incredible development, not one that I expected. I was very skeptical of trading in the Bitcoin market when I was SEC chair. I thought, there were studies that 90% of it was wash trading, ripe for manipulation and the like, large people dumping. The fact that we have these institutions that know markets better than anybody and are saying, we're going to put our reputation behind it, I find that pretty remarkable.
Can they say no to a spot ETF? For how much longer?
Well, it goes to that issue. I think that when the SEC approved the futures-based ETF, they said, let's look at the futures market. We see the surveillance. We see the protections in that market for the end investor that are sufficient. We don't see them in the spot market, so we're going to make that distinction. I think what the institutions are arguing is that those distinctions have gone away, and now the spot product is actually less drag, more efficient for the investor. So if there's not that delta in regulation, not that delta in what I could say efficacy, the spot should be approved. That's the argument that's going on right now. Look, the regulatory process, whether it doesn't matter.
It's been a while already.
It's been a while already. What I would say is this: if they're right, that you can demonstrate that the spot market has similar efficacy to the futures market, it would be hard to resist approving a Bitcoin ETF.
We'll see. We talk about China. Secretary Yellen is over there. Can we start investing in Chinese stocks again? I mean, there's people like Kyle Bass think you're out of your mind with the, less stringent regulatory oversight and sort of avoiding some of our regulatory oversight here.
Right.
Are we friends again?
Well, look,
you think okay?
I love Kyle because he does his work. You see, he digs in, he does his work. We had 2 cabinet secretaries go to China in the last 3 weeks. What are that telling us? We have a time of dislocation in the global economy. They recognize that we need China, and China needs us. in order to get through this period of dislocation.
Get down the rhetoric more than anything, right? It's not that we're going to change behavior so much as change the way we say things, is what it felt like to me with this, where she's saying we're not going to use words like decoupling and de-risking. They're talking about diversifying. I mean, it's the same thing, but she said it like this, right?
Well, look, we are in a place in our relationship with China where we are overly, there's no doubt about it. I don't think anybody takes the other side of, we're overly dependent on what I would say is a vicious competitor and somebody who on the world stage would like to displace us. Sure. No one takes the other side of it. But we're there. What do we have to do? We have to recognize how codependent we are. I actually like the Elon Musk co-joined twins version. We are very much stuck together economically. I think what we're seeing is not just so much going, let's say, going positive, but if things were to get more negative, it would be very difficult to get through this time of economic turmoil. I think that's the judgment that this administration is making, demonstrated by sending 2 cabinet officials to say, let's try to work our way through this
in the
near term. Look, I see both sides of the argument. I see that now is the time where the United States is in a position of relative strength to start decoupling, to be making those strategic moves. I also see the fact that any kind of abrupt mistake in U.S. China relations is going to have an adverse effect on the economy. This is going back to Joe's negligence point.
Right.
You know, there's no perfect solution here. You know, we could do a better job of understanding where is the end state that we want to be 5 years from now, 10 years from now. I don't think we want to be as dependent as we are today.